Dividend investing funds are really popular with a lot of investors because you get that nice diversification. It's a fairly passive instrument. You can trust the manager or the passive algorithmic index to keep your portfolio intact for you. And ultimately, they just help you sleep well at night. And again, if it's a dividend paying portfolio, even better, you get nice passive income from that fund. So with that in mind, in this video, I'm going to discuss if I could only own 3 funds and had to hold them for the rest of my life, these are the 3 I would pick for my portfolio. Before I get into these picks though, if you like getting dividend content, if you like learning about funds as well as individual stocks to help you build a better overall investment portfolio, especially focused on dividend investing and beating the market, please subscribe to my channel to get future content. Thank you very much. Okay, so what are these picks? Well, the first one is really, it's going to be my core diversified equity holding. Now, which one I would pick would really depend on where I was in my station in life. If I was younger and I wanted to maximize total returns, or if I simply just wanted a broad, diversified, growth-oriented portfolio with the big bet on the macro theme of AI and the mega cap stocks out there, I'd pick a low-cost, broadly diversified index fund like the S&P 500, their ticker symbols like SPY, VOO, and others, or I could even bet on the NASDAQ, QQQ, or maybe the Schwab Growth Fund, that's kind of the sister of SEHG. Those are all great low-cost funds that can generate a lot of growth. Or, as a Christian, I generally subscribe to biblically responsible investing in the individual stocks I pick. And so if I was to do that with a fund, I would pick one of the ones done by Inspire Investing. There's one they have called PTL, and that's really just a S&P 500 equivalent. It has a very low expense ratio, I think of like 0.09%, and it holds the 500 largest U.S. biblically responsible investing standards. So personally, that's probably the one I would pick, but I think all those other ones are great options depending on, again, what your goals are. Now, again, if I got really close to retirement and I was wanting to live off of dividends strictly, I would probably either pick SEHD or I would pick something, a covered call ETF like SPYI, JEPI, JPQ, QQQI, some combination of those or one of those, just again, depending on how much income I needed to generate. If I had a large portfolio, I didn't need to generate a lot of income yield, I'd go with SEHD because I get that nice growth. I don't have to worry about the options stuff. It's a lower expense ratio fund, probably gonna give me better risk-adjusted total returns over the long term. But if I needed a little bit more of a jolt, if I didn't have as much saved, I probably would go at least partially into some of those covered call funds to supplement HD or entirely into one of them, probably either SPYI or JEPI due to the greater diversification. So anyway, hopefully that's good for you, food for thought on that one. But again, for me personally, out of those, I'd probably pick PTL just because. Again, I prefer individual stocks, but if I had to do that, I'd probably do that. Okay, what about the second fund? Well, again, with that first one, you're getting broad diversification. You're not getting much exposure to real assets. And so my next fund would definitely be a real asset fund. Now, you can pick ETFs, you can pick CEFs along those lines, but I'm going to take a more liberal definition of fund here for the purpose of this video, and namely being anything that operates like a fund or even potentially a hedge fund. And so when I think of hedge fund, I think of some of Brookfield's subsidiaries. And so for example, Brookfield Infrastructure Partners, they are effectively an infrastructure hedge fund. They invest in stakes of assets that its individual institutional funds own and manage. And so BIP really just owns a diversified pool of equity interests in assets or even funds that Brookfield manages. And so really you're getting an infrastructure CEF or infrastructure hedge fund even with an investment in BIP. Even the fee structure that Brookfield extracts from BIP for managing it, very similar to a hedge fund fees. And BIP has a phenomenal long-term track record of growing its distribution at a mid to high single digit CAGR year after year after year through all sorts of economic environments, of generating very attractive total returns. And these are very attractive risk-adjusted returns because it has a BBB plus credit rating. It has very defensive, highly contracted cash flows. Again, a very diversified portfolio across the broader infrastructure space. You have midstream infrastructure, you have utilities infrastructure, you have transportation infrastructure that includes railroads, toll roads, ports, shipping containers. And then you also have data infrastructure that includes fiber assets, tower assets, and increasingly data center assets is probably their biggest growth avenue right now. They're really leaning into the AI tailwind. And so with all that, plus you get a yield of over 5%, expectations of cash flow per unit growth of over 10% for the foreseeable future. And again, a distribution growth rate likely to be in the high single digits for the foreseeable future. Again, I think this is a great complement, a very attractive risk-adjusted return profile with really not that much risk given the balance sheet strength, the diversification, and the skill of the manager at Brookfield being the world's largest infrastructure investor and probably the best one out there. Then finally, I would invest in a precious metal fund because we're in a very uncertain world right now. There's growing risk of China invading Taiwan, which could plunge the world into a depression. Even if that doesn't happen, there's a surging and simmering trade war between the US and China, as well as uncertainties with the US and EU and other countries on the trade war front. And then, of course, you have the war in Ukraine between Russia and China. You have Middle East, Israel and Iran could go to war at any time. You have deficit problems in the United States. So we have a lot of issues. And so I think having exposure to gold and precious metals as a whole is prudent. And so if I had to pick one, I think the Sprott, ticker symbol CEF, which has majority gold but some silver exposure as well, is really attractive because it's a reasonable expense ratio. It trades at a discount to the underlying value of its precious metals, and you hold real bullion that's assigned to the fund in vaults in Canada. And so I think CEF is great for a long-term holding for bullion exposure in your portfolio as a hedge against some of these external risks. So there you have it. You have a well-diversified, low-cost index fund, whether it be PTL, QQQ, SCHD, SCHG, SPY, VOO, or some other pick out there, or maybe one of the covered call funds if you're more close to retirement. You have a broadly diversified real asset portfolio held in a fund like Brookfield Infrastructure Partners that leans into a lot of really attractive growth trends while giving you a good income and total return potential. Then you have your hedge against macro collapse with a fund like CEF that gives you real gold and silver bullion exposure. So hopefully that's a useful combination for you. If you like this, please give this video a like. Again, subscribe to my channel if you would like to get more of this content in the future. And again, I would urge you, if you have other picks that you think are better for a 3-fund buy and hold forever portfolio like this, let me know in the comments below. I'm always interested in hearing about new funds out there. There are always new ETFs coming to market that I'm not always aware of right away. So please let me know if there's one that you really like that you think I missed. Also, if you want to learn more about how I manage my individual portfolio and pick individual stocks and actively manage the portfolio through strategic buying and selling to generate high teens annualized total returns since inception over 5 years ago, launching my investing group to beat the market during that period, check out High Yield Investor. It's in the link in the comments to the video. Also, there's a link to Monetary Metals, which is where I invest in gold bullion and lease it out for lease interest, about 4% yield at the moment on gold. A very attractive risk-adjusted way to make money off of your bullion instead of just letting it sit there and actually paying a fee. So that's why I use actually Monetary Metals instead of CEF for my metals exposure. Thank you very much. See you next time.